Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HAICHANG HLDG interim report. HAICHANG Ocean Park Holdings Limited offers a diverse range of businesses and services, including theme park operations, property development and investment, hotel management, small playground operation, visitor services, consultancy, management, recreation, technical support for aquariums, tourism, consulting, designing and construction, project management, import and export of goods and technology, marine biotechnology development, finance, lease business. The HAICHANG Ocean Park Holdings Limited, HKEX 2255 stock price has shown notable fluctuations over the past year, with a 6.17% increase overall. However, certain events and conditions may have contributed to periods of relative stability or prevented significant drops in the stock price. Key factors that likely played a role include financial mitigation efforts by the company, such as securing potential financing and negotiating non-legally binding agreements. The proposed subscription of new shares also provided a positive signal to the market, helping to stabilize the stock price. Additionally, the recovery of China's tourism sector post-pandemic may have provided an underlying level of support for the company. Speculation surrounding a strategic acquisition by China Tourism Group Corp. In October 2024 could have generated positive sentiment and provided a floor for the stock price during that time. While these events may not have completely prevented significant movements in the stock price, they likely contributed to periods of relative stability or prevented larger declines. The primary drivers of revenue growth or decline for a theme park company can be summarized as follows. Revenue decline. The main factors contributing to revenue decline are external economic pressures and decreased visitor attendance and spending. Specifically, a 12% decrease in park operations segment revenue, 15% decreases in ticket sales and in park spendings, and sustained effects of the complicated external economic environment have all contributed to revenue decline. Revenue growth, on the other hand, several factors have driven revenue growth. These include the rebounding average guest spending per visit during peak season, successful inclusion of new parks into innovative development cases, hosting of high-profile events, launch of distinctive activities, and upgrade of existing projects. Additionally, online sales channels, IP strategy, leasing of tourism and leisure projects, and implementation of large-scale asset-light theme park projects have all contributed to revenue growth. Overall, the company's ability to adapt to external economic pressures and capitalize on new opportunities has been key to driving revenue growth. The company's financial performance has taken a significant hit in recent times. A decline in net income is evident, although the exact percentage or amount is not specified. The gross profit margin has also plummeted from 24.4% to 10.4%, indicating a substantial decrease in profitability. A closer look at the numbers reveals that both gross profit and other income have decreased significantly, from RMB 194.9 million to RMB 71.7 million, and RMB 96.3 million to RMB 27.4 million respectively. These declines are likely contributing factors to the company's reduced net income and lower profit margins. The reasons behind these changes are not explicitly stated in the summary, but it is clear that the company is facing significant financial challenges. To reverse this trend, the company will need to identify and address the underlying issues driving these decreases in revenue and profitability. The company's financial performance indicates a strong ability to generate cash from its core operations. The operating cash flow for 2024 was RMB 1,456,789, demonstrating a significant inflow of funds into the business. Furthermore, the net operating cash flow is also positive at RMB 37,912, confirming that the company's operating activities are generating substantial cash. This is explicitly stated in the financial report, solidifying the conclusion that the company is indeed generating positive operating cash flow. The company's debt level has undergone significant fluctuations. Initially, it decreased from RMB 5,898.4 million to RMB 5,839.3 million on page 24. However, a closer examination reveals that the debt level actually increased by 6.7% from 2024 to 2025, as stated on pages 41 and 72. This increase is evident in the figures provided, with the debt level rising from RMB 4,599 million, 100,000 to RMB 4,883,200,000. Despite these changes, interest expenses have not been explicitly mentioned as having changed significantly. The company's financial performance reveals a mixed picture across different segments and regions. On the positive side, park operations have been a standout performer, with significant revenue and profit growth in both reported periods. In contrast, property development has struggled, with low revenue and meager profits. Park operations have consistently delivered strong results, indicating a robust business model that is capable of generating substantial returns. Conversely, property development has underperformed, suggesting potential issues with project execution or market conditions. These divergent trends highlight the need for the company to address its weaknesses in property development while building on the strengths of its park operations segment. Management is optimistic about the company's outlook, aiming to become a leading provider of integrated oceanic culture-based tourism and leisure services in China. To achieve this goal, they plan to expand their business by delivering operation capabilities and IP products across the country. 2 large-scale theme park projects are underway in Beijing and Fuzhou, leveraging a partnership model that enables efficient land acquisition and construction. The company is also rapidly advancing its OaaS, Operation as a Service, business, introducing internationally renowned IPs to enhance theme parks and OaaS operations. This strategic move aims to strengthen market competitiveness by integrating IPs into various leisure and entertainment scenarios. With stable financial resources in place, the company is confident in meeting future commitments and investments, ensuring successful execution of expansion plans. That concludes the financial summary for HAICHANG HLDG. Feel free to comment below, and I will be happy to answer them when possible.